All right, so next video. So we were just talking about a little bit more about preparation and how, because I was prepared, I was able to maximize my gains and limit my risks on this DraftKings trade. But now we're going to talk about my next thesis. So the new thesis is that every single SPAC has been hovering around its offering price of $10 for as long as it's looking for a target, and even sometimes even once it's announced a target. So for today, we're looking at THCB. Actually, that wasn't even the right list, though. We're doing mergers here. So THCB is merging with Microvast. I've done my research on that. I know all about that. And so my thesis is that any company with hype, any company with volume that's a SPAC that's going to merge, when that merger happens, is going to go one of two ways. And I've been playing that thesis with straddles and making pretty good money. It hasn't had a mega winner like I've been looking for because the SPAC market's been shit lately. But I've had some puts paying off. It's been really good because I've been able to sell the puts on pullbacks and then sell the calls and get out of the straddle that I entered at the same time. So I'll enter a straddle when it's $10, pulls back to 9, I sell the puts, cranks up to 10, 50, 11, I sell the calls, and boom, I made my nut on both sides of the trade, even though I entered it at one time. So that's been cool, but now I kind of have a different theory. So that's my theory about or my thesis rather, about SPACs upon merger. My new theory is about de-SPACed companies, so after they've already merged, that have earnings come up. So let's take Talk, for example. Talk merged with the company HEC, a SPAC. You'll see early on it was just in SPAC land at 10, and then they announced that they were potentially taking public this company, Talkspace, which is like the Teladoc of mental health. They do all types of talk therapy. You can text your counselor and stuff. It's great. SPACs took a beating. It went down to $10. And then when the merger happened, simultaneously they had earnings, it looks like, right after the merger happened. It crashed. And also the market was just in heavy pullback, especially small caps right then, especially speculation right then. The volume on this baby has not been great. But it literally just de-SPACed a couple weeks ago, so I feel like word hasn't really gotten out about it yet. Either way, you see it's relatively volatile to news, and it's going to have news coming up soon. Let's see what we got here. Ooh, maybe it made Tip Ranks talk right there. That's cool. So they just named a CFO. And I forget why she's fancy, but I know she is fancy. Let's see here. Oh, she's from Eli Lilly. So they named a solid CFO. That's awesome. They partnered with Demi Lovato. So they got things happening. They got this news, and the news isn't really doing anything to the stock, this kind of news. But they have earnings coming up. It's on my calendar. I don't know when. I think it's August. It's beginning of August. They have earnings coming up at the beginning of August. They only offer monthly options right now. So, like, if you go into the options chain, August 20th is after their earnings. So for 15 to 20 bucks, you're going to get a $7.50 call. This thing just came from $10, and I think it's a great growth company with huge potential. That if they have, what I've found on the earnings calls, especially the first earnings call, is the thing that matters the most appears to be the CEO or whoever's leading the call, their tonality and how they're speaking with these growth companies, because some of them don't even have earnings yet. This one will, so the numbers might have some impact, but the only numbers that we have to go off of to guess what their earnings could be was their investor presentation for the merger, which looked great. I'll share some of that with you when I can. I don't have it saved on this iPad, but it looked great. So I think there's a solid chance this baby rockets above $10 again. If that's the case, those $20 calls for August, Um, for $20, if this thing went to $10, those babies would be worth like $300. That's an insane return. You're talking about 15x at least. Um, Not saying that's going to be the case. I'm saying it's a real cheap bet to place for $20 to get in at that price. That's awesome. So I got a couple of those, and then I actually got more of these in September because I was getting them for $30 in September. So that was a pretty good deal to me. But the point is, I knew about this company for months before. I've been studying them, researching them, hadn't jumped in the trade. The point is to not be impulsive. The point is to be prepared by having all this knowledge. I know when their earnings are coming up. I know what their option chain looks like. I know what their volume looks like. I know what their news looks like. I know how they've responded to news in the past. I know how they've tracked with their index. It's not their index. I don't think they're in the small cap index yet. But like the IWM, they're a small cap company. They're probably going to track with the IWM. Another example of, well, I want to keep going on this thesis. So I was going to dive into IRWD, Ironwood Pharmaceuticals, and excuse me if you can hear my kids blasting TV in the other room. I was going to dive in there, but let's not. So THCB, this is a play that I'm in, and another one I was prepared for. So when it bounces, when it goes up, I'm buying puts. So I'm creating a strangle here on this because they had two events coming up before their next options expired. So between now and August 20th, they have earnings and a merger today. So I'm like, fuck it. I'm going to buy these options no matter what. But I'm just going to, when it cranks, if it cranks on, so the merger's first. So if it cranks on the merger, then I'll be buying puts when it cranks on the merger, knowing it's likely going to pull back either after the merger's done or due to earnings, either being good, being less than expected, just being earnings, and people are over it after earnings, whatever the case may be. I also noticed that it says hard to borrow up there, so I'm going to dive in on the short position on this and see what the short position's looking like and do some deeper research there. But my theory is really just that these SPACs, these brand new companies, they have news coming up, they have events coming up, they have things coming up that people are going to react to. Since they're new companies, I don't have a lot of data to look at the chart and go back all that far. You see, I pull up the weekly, and you don't even have a full solid year worth. So that they announced the merger, I'm sure, the beginning of this year right here where it started going crazy. So all you can really tell about this company is that during a really volatile, crazy year, this stock has been really crazy and volatile. That gives me some faith that it'll move on news of the earnings and things like that. So there's two events coming up before the 20th. If I wanted to be even safer, I could go out to September just for giggles, but I'm gonna risk more money. But if you see, it's not that much more. It's $1 next to 80 cents. So like, what's the difference? Let's even see if December looks similar. The fuck? There we go. So yeah, you might even want to go all the way out to December. I think that might be as far as these babies go. No, we got March 22. So for $2 and probably 25 cents ish per share, you can get in on that $12.50 and be all the way out forever. So I'm buying puts and calls though. So I'm making this a strangle because it doesn't even have any at the money, so I can't even do a straddle if I tried. But, well, I guess I could, but I wouldn't do it my way with THCB. So I would buy probably the 12.50s here. And this is how I'm thinking too when I'm looking at the chart before I even enter a play. Long before. I'm looking at this and I'm like, okay, they got these two events coming up. They have these cheap prices. This is how far out. The price doesn't go up that much by the month. See, some of them would be super cheap for this weekly or this month, and then a month out, it's like triple that. It's like, well, if every month you're going to, charge me this, it should be minimally double what it is now. So for this, I would just grab, personally, I'm thinking I'm going to grab the $12.50 calls and the $10 puts, and I expect this baby to jump at least $1 in either direction. When it does that, I'm gonna double down on the other position and take profits on the position that's profitable. And so that's my game plan going in with every trade, with every position. I always have this type of plan in mind. Um, and then I dive into the research. Like I said, I saw that hard to borrow there, so I'm gonna swipe out of here, and I'm gonna go into Fintel. This is where I check a lot of my short data at. I'm gonna pull up, boom, short interest. I see it's 27% with two bits of news coming up. That's pretty sexy right there. Because either one of those news could squeeze this baby hard. Well, this isn't adding up. Oh, that was short volume I probably saw. Yep, short interest is diddly. Short volume is probably just today. That tells me a little something. Go to insider trades. 51% insider ownership. 30% institutional. So this isn't a flawless way to think of it, but it's just something to have in mind. So like insiders own half of it, institutions own 30% of it, and 20% of the volume yesterday, over 20% of the volume yesterday is coming from people shorting it. Like most people, it seems, that have this are just holding it. And then you see nobody's only short on this play. We have 63 that are long only and 8 that are long and short, but 0 that are only short. So no one has any strong conviction that this baby's going down. So in my strangle, I'll probably have a bigger bullish position here just because of what I'm seeing here. Could also dive into like tip ranks. I have all types of research tools that I use. You just gotta find which one you like best. I like honestly jumping all over the place and using all of them. No analyst activities, won't have much. Horrible smart score. Just means they don't really know much about it, honestly. Yeah, so a lot of speculative investing here. I don't know. I like it. But never playing it one-sided. We're not psychics. If you just play one side of the market, if you're only betting on that baby to go up, there's a solid chance you could be let down here. So I like Apple running into earnings too. Let me stop getting distracted and go back to my thesis. So the thesis is that will be a de-SPAC to play by the time it has its earnings here coming up in less than a month. Let me see some other ones here. So Payscape. Payscape recently merged with Bill Foley's, I believe. This baby's ready to run. The chart looks good, so I look into the chart, boom. I look into the news. Looks like the right stock at the wrong time. I'll check into this. And it just talks about all the other fintech companies that are doing better than Paysafe is, but yeah, there's no real thesis there. Bark is another one that has earnings coming up. BarkBox. I think with the pet inflow, like how are you not in this right now? Because everybody bought pets for the pandemic. Chewy's done great because of that. BarkBox is a similar company to Chewy. Like I said, they did report earnings since the merger, it looks like, and they ripped a little bit afterwards and have pulled back ever since. So it looks like they probably reported a good earnings and they had a good reaction to it, which is a good sign. They probably completed the merger around here, which is also a good sign, unless that was a run up into earnings. This was the announcement when it ran to 17.25. So overall, people have been excited about this company. It's been more than double where it's at right now. Chart appears to be reversing. It also might just be tracking with small caps. We have a good reason to like this company because BarkBox and pets in the pandemic all go hand in hand. We have other companies to compare it to in the sector like Chewy. Um, I like it. I'm gonna give me some calls on this one. Now I'm thinking that I'm not just going and doing it. So that's why I'm prepared. So like on Monday this week, we had the bloodiest bloodbath of all bloodbaths. That's what when it freaking pulled back. It had ripped the Friday before back up to 8. Oh, fuck you. Don't do this to me. I don't care. There we go. Okay. It had ripped up to, 880. And then it fell back down to 815. Now, if you were prepared, you could have grabbed this baby at 815, got in on those calls next to nothing, Now it's back up to 880, looking like it has the potential to break out. And before you know it, this bad baby. So then after that, I'm finding resistance points, and I'm thinking of entry. So finding resistance, finding support, looking for where I'm going to enter and exit. I haven't used this iPad to like draw on charts yet. I just got this fancy little iPad Pro, so let's see. Be patient with me, guys. Okay, cool. Damn. There we go. Anyways, so I'll set up my support and resistance levels, and then I'll look for where I want to enter, and then I'll think about it, I'll debate it, I'll watch the news, I'll see what the overall mentality is like, and I'll wait for a good entry point like Monday when everything crashed. There was no reason for Bark to crash with it. It was just moving with the rest of his team on the stock game. So that was a great entry point. Body, this is another one with earnings coming up that I really like. Beachbody, if you want to compare it to like an at-home workout stock, you can look at the momentum growth stock like Peloton. I'm not saying that it's going to go to the same price as Peloton. I'm saying when you look at its evaluation and things like that, you can take into consideration. Now, this is an established company. They've been around for a long time. They've done a lot of big things. Got new programs coming out, news, all this shit. I like it. I'm gonna find my supports. I'm gonna find my resistance. I'm gonna find good entry. I'm gonna be prepared for when this trade presents itself. All right. So this week we're working on preparing and being patient, finding good entry points, not being impulsive, and just avoiding trades more than forcing trades. Okay. We really want to work on avoiding trades that are not smart entries. All right. I hope this helps y'all out.